All right. So I love this episode. I sat down with Vlad Arakcheyev. Vlad has a really not fun story, but a really cool story. He formerly was a graphic designer, and when COVID hit, he was furloughed for a while. And his wife actually prompted him to get into real estate. And if not for his wife, he probably would not be in real estate and working towards their future goals. And so love this episode. Vlad shared some amazing stories and some awesome wisdom. So hope you enjoy it. Thanks for listening. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. My name is Charlie Hardage, and I'm the host of Passive Investors Playbook. Today, I have a very special guest, Vlad Arakcheyev. Vlad is an active investor, co-sponsor, and JV partner in over 500 multifamily units and land development. This amounts to a multi-million-dollar portfolio. Vlad focuses on operations and asset management at Zontik Ventures. Before real estate, Vlad was a graphic designer. Vlad's creativity has helped him run large-scale projects with ease. He is based in New Jersey, is a member of the National Real Estate Investor Network, and a full-time real estate investor. Welcome to the show, Vlad. Super excited to have you.
Thanks so much. I'm pumped to be here. Thank you.
Good. Yeah, absolutely. I love your shirt. If you're not watching on YouTube, you could tune in to see his shirt.
Yeah, it's a Boston shirt, and it says Boston. My sister gave it to me. It's pretty funny.
That's awesome. Vlad, do you mind telling the audience a little bit more about you?
Yeah, absolutely. Hey, listen, my real estate journey has been just a complete crazy roller coaster where everything started during COVID. I was a graphic designer, got furloughed, and I didn't know what to do. I didn't know when my next paycheck was coming from or if I'm going to be laid off or anything like that. So I decided to, hey, listen, let's try to be a real estate agent. And I had huge support of my family and my wife. I have 2 children, 3 cats, and I'm like, hey, listen, we got to feed those cats, right? So took the class at night, got my real estate license, and started selling residential houses here in New Jersey. And that took me to flipping and wholesaling. I visited a few meetups here and things like that. And eventually I was like, hey, listen, it's got to be something better out there. So let's go for cash flow. So instead of flipping, I bought a rental and it was netting $1,000 a month. But I started receiving, all these crazy calls from tenants as always on Friday night. Hey, listen, my toilet's clogged. The squirrel is on a roof. There's a raccoon in the attic. True story. I'll never forget it. And I'm like, how can I get rid of a raccoon? You're basically living in the woods. It's to be expected. But went to a multifamily conference in Houston, and my eyes were opened on multifamily, on large multifamily, and I was hooked. I was like, oh my gosh, this is where I have to be. So as soon as I got back home, we started looking at mentors, because this is what we needed. We needed mentorship and education and connections. So I started looking at mentors and interviewing all the mentors in multifamily space, and I joined Jake and Gino community. They're multifamily investors, and also they have a mentorship program. And after about 8 months or so of education and just complete craziness and networking and being on Zoom calls and doing everything that I can to be in multifamily, I got into my first deal. But back up a little bit, when I started flipping, I thought, hey, listen, can I be a graphic designer and a flipper? And for me, it didn't work. It might work for some people, but for me, it didn't, because I started losing deals. I could not pick up the phone from 9 to 5 because I was at work, and people were calling me and they're like, hey, listen, we have a house for sale. I thought you're going to come over. And I said, oh my gosh, let me call you back after 5. And I call them back and they're like, oh, it's already gone. It's sold. So I decided to quit my W-2, just burn all the boats, and uh, doing real estate full time. So yeah, since flipping and now in multifamily, I'm full time into it. So I'm loving it.
Man, that's crazy. So you started during COVID.
Yeah.
Man, I've spoken to so many people that were in some type of job and career, and COVID impacted them immensely. You were furloughed. Several of my guests have been in healthcare or are still in healthcare. And since COVID, they just kind of burnt out, crazy hours, massive shortage, and tons of overtime. And so I think COVID did that to a lot of people. Unfortunately for you, you kind of lost your job temporarily. But I think COVID opened the eyes to a lot of people on, okay, there's got to be something else out there, right?
It did.
Yeah,
For sure.
And I think for the healthcare workers I've spoken to, it's like, I mean, yeah, it's great, I love what I do, but I can't do this forever. And so for you, unfortunately, you loved what you did, and you couldn't do it forever because not your choice, right?
Yeah.
But yeah, that's fascinating that you got in after COVID, and unfortunately, not great circumstances up front, but now it's definitely paying off for you.
Yeah, it totally changed my mind. A lot of people thinking or saying, hey, I read the Purple Book, Rich Dad Poor Dad, and it changed my ways, and I immediately got hooked up. I read the book. It's a great book, but it didn't do. I understood the book, but it didn't do it for me. Mentally, I was not there. It's like, when sometimes you read something so inspirational, but mentally you're just not prepared to take that leap. Maybe your personality is different. You don't want to leave. You too safe. You don't know, right? You're afraid of something that you don't know. So I read the book. It's great. I got it, but it didn't do it for me. You know what did? Life-changing event. So this life-changing event was COVID, furloughed for, I think, 6 months. I was furloughed. Yeah, I enjoyed my summer. I rode my motorcycle, but I at the back of my mind, I was like, what am I gonna do now? Am I gonna be back? When? What's gonna happen? I don't like uncertainty. I want to control my life, my paycheck, my future, my family, what's gonna happen here. So that really changed my way, and that's when I applied of what I learned in the books to the true true life.
Yeah.
That's exactly when I combined them and stuff clicked. So
Wow. Okay,
yeah.
so you read the book, Rich Dad Poor Dad.
Yeah.
I think most real estate investors have, a lot of people have. And I think like you, when I read it, I was ready for something else. That definitely inspired me. I just didn't know what it was at that point. I didn't know what type of real estate. I didn't know if it was real estate, and then what type of real estate. And I think if I would have read Rich Dad Poor Dad when it was recommended to me, probably, I don't know, 15, 20 years ago, I wouldn't have been ready for it. I would have been like, yeah, okay, I mean, that's great, but not me, right? Someone else would benefit from it, but not
Yeah.
me. So at that point, when you read it, you weren't in the right mindset. So it didn't really change your mindset. You're like, oh, cool, but that was about it. And then you had that life event of being furloughed for about 6 months, all the freedom of being on your motorcycle, and that's great for a short period. But you want to control your future and your destiny. How did you get into real estate then? I guess take me through that. So you're furloughed, and then did you automatically think, oh, real estate, or?
Actually, no, my wife pushed me into it because she goes, during any time or any crisis, people will still need housing. It's what people need, basic human need, right? Food, clothing, housing, apartments, in my case. So even though everything was closed, there were lines here lined up around my neighborhood. People are looking at houses, selling houses. People are still moving. They need to live somewhere. So it's basically something that you can rely on. In addition, we thought of maybe I'm going to do it part-time and kind of see how it feels. And also another way, of course, tax benefits. I can't leave that out. So we were paying a lot in taxes. And if you're a real estate professional, you can write off more stuff in taxes. You can save more money when it comes to that. So that was another pain point when she said, hey, listen, you might be able to do better on taxes if you're self-employed. And that even brought me into it a little more. As soon as she mentioned that, and I'm like, okay, let's try this further. We called our CPA and we're like, what's going on here? Is this really true? Active participant in a passive activity, is that really happening here? And she's like, and he goes, absolutely. Yeah, you will benefit greatly if you're going to become a real estate agent and be self-employed. And from that on, all the light bulbs went on, and I was just pumped. There's no turning back. And then, of course, I discovered flipping, wholesaling. That was a big addition too. So technically, you don't have to sell a house as a realtor. You can wholesale it to another flipper or an investor. So you have different avenues. You have different things that you can present to a potential seller. So that was that. I was hooked. I was just totally hooked.
So your wife pushed you towards real estate in general, but she didn't push you towards flipping or getting a license or multifamily, right?
And well, no, she just said, hey, listen, why don't you try it and see what happens? So I did, and then she goes, it's got to be something out there, right? What's better? Because her personality, she has to be moving forward. She cannot sit still. So she goes, hey, listen, let's try passive cash flow. That's what it's all about, right? Warren Buffett says you have to make money while you're sleeping. So where can you get that money? Rent. You have to get rentals. So we got few rentals and it was netting $1,000 a month. Great, right? So how many of those houses do you need to support your lifestyle and to cover your expenses? So we calculated all that. So we needed not that many because we don't live very lavishly or anything like that. But anyway, it's more difficult to close, let's say, on 10 houses than one larger property, right? I mean, 10 houses, 10 closings, 10 closing fees, attorney costs, you name it. You have to have 10 different loans, 10 different roofs, foundation problems, everything. But if you close on one multifamily, everything is under one roof. Everything is controlled by property manager. Everything is in one place. So it's easier to manage larger multifamily. And forget about 10 units. What if you go 100? That's even easier to manage because you have multiple people coming in. You're not alone anymore, right? So you have people that are responsible for their own thing. They are not just spread around, running around like chickens without the heads. They're really focused on what they have to do. Like I'm focused in one of my projects on asset management. I don't do anything else. I just focus on one thing, executing the plan to make returns as high as possible, making, of course, the conditions my top priority to have the conditions are, if you really don't want people to live in a bad apartment complex, right? If they're paying you higher rent, you really have to fix it up. So we do a lot of stuff, not only on the interior, but exterior also. And few things like lighting, security, gates, very nice landscaping. So people would be proud to come home. So we care about our tenants, we care about the community, and we really like what we do.
Yeah, man, that's amazing. So I love what you said about your wife. She has to be moving forward. That's a mentality that embarrassingly enough, I've just really only recently adopted the last 3 to 5 years. And man, the amount of the amount that I've grown in that time period, is amazing. And I don't remember who said this, but if you grow by 1% a day, at the end of the year, you've gone up by 365%. And I mean, it sounds silly to say that, but if you just get better every single day and you're moving forward slowly but surely, you're going to be in such a better spot than if you try to go after everything day one and you burn out, right? Because
Yeah.
you're like, oh, that was way too much work, I can't do that. Well, you don't have to, kill yourself trying to get there. Just slowly improve. Maybe that's by reading a book or listening to a podcast, something that you're and obviously my podcast, but listen to a podcast, read a book, or join a networking event, whatever it is, just to improve yourself a little bit every single day. So I love that that you said that about your wife. I think that's great. And then the quote, the Warren Buffett quote, again, don't have it memorized, but something about if you you have to figure out how to make money while you sleep.
While you're sleeping,
Yep.
yeah, that's what it's all about. If you can work twice as much and make twice as much money, but if you're gonna work smart, you can make 10 times the money.
Right.
My goal is, if you're gonna make $50,000 a year, my goal is to cut that time and make that in 1 month. So if you can make that money in 1 month, then you can figure out what to do your other 11 months. You can travel, you can spend time with your family, you can do anything you want. Everybody's busy, everybody's trying to live their best lives and be best person or help the community. In my opinion, real estate is one of the best vehicles here, because while you have tenants, while you have cash flow coming in, passive cash flow, you have time to do other things. And this is what my goal is. My goal is to do other things. Like, one of the things, I'm looking at my vision board here on my right side, it says buy animal rescue farm by 2026. That's what we want to do. We want to buy a rescue farm here in New Jersey. And how we got that idea, with kids, we went to a petting zoo. And we spoke with the owner, and he said they all rescue animals here. And kids enjoy them, we enjoy them, and plus we rescue the animals. So we got this idea, hey, listen, if we have time and we have this passive income coming in, and we covered our expenses, we want to do something. So let's help the community and kids and help animals, ultimately. Let's buy a rescue farm. So our goal here is to buy a rescue farm. And it's one of the goals here. I have, I don't know, about 6 of them here, but yeah, it's one of them. And I believe passive income in real estate is the way. Yeah.
Man, I love that. There's a animal rescue farm here about 10 minutes from where I live, and my wife and daughter have been there a bunch. My daughter loves animals. My wife and I, we liked them, but now we're beginning to love them because of our daughter. But man, that's awesome. I've never heard that be on someone's vision board before, but I think what is clear across the board is people want to be able to buy their time back.
Yeah.
And instead of working at a W-2, or maybe you love your job, and that's okay. I was never in the fortunate enough position to love my job. You can keep the job or you can leave your job, but at least you have that choice, right? Because you have passive income coming in, and you mentioned, cut the time to make the same amount of money, basically. So you make that same amount of money in a month, and you can be on your motorcycle riding to the animal rescue farm, right?
Yeah, I mean, it's one of the things like I speak with a lot of people that have a job and they go, well, listen, my time is, all taken. I have to run here, I have to run there. And I go, well, listen, what if you invest into something that's going to at least cover half of your expenses?
Yeah.
Then you have 50% more free time to do whatever you want to do. And they're like, oh, wow, that's great. But how can I do it? Am I going to invest in what? Crypto or stocks or 401k? I'm like, you can, but they're jumping all over the place, right? Look what's happening. Look how the economy is doing, and look at the inflation. So if the inflation is 10% and your savings is giving you 4%, so technically you're losing money
Yeah.
here. If you invest in multifamily and we target 20%, then look at the returns here, right? So just hypothetically, for the ease of numbers, if you invest $100,000 and you're looking at monthly distributions, every month you can get $400-$500. It's $8,000 a year, approximately 7,000. And then on a sale of the property, you're looking to double your money. So it's average 20% return. So let's say you invest in 5 deals, right? 5 times 500, there you go, do the math.
Yeah.
So that's your passive income coming in, and you didn't have to do anything for it. You're a passive investor. You're
Right.
doing your W-2, you're working, you're doing whatever you would like to do. Doctor, IT person, engineer, invest. Anyone technically can.
Yeah.
So
I love that. And in some of our previous investments, our passive investors have ranged from teachers to doctors, lawyers, engineers. I mean, you said a lot of the terms, but I think that was so profound for me when I heard that there were teachers. We had a librarian invest in one of the deals. And I'm like, man, that's awesome, because back 10 years ago, 12 years ago, they couldn't invest with us, right? That was not allowed. You had to be ultra wealthy pretty much to invest in these types of deals. But 12 years ago, it was allowed. And so now anyone can invest in these deals. And I love that, because when I heard about multifamily syndication, had just a huge impact on me, because I the only passive investments I knew were 401ks, IRAs.
yeah,
But a 401k, you're still managing that yourself. IRAs, you're still doing that yourself unless you have a financial planner. And then sometimes, you don't really know what you're investing in. You just tell them, are you risky? Are you conservative? Are you somewhere in between? And then they have robots investing for you, these
yeah,
algorithms investing for you. And those are okay. I'm not saying they're bad, but I when I first started investing in multifamily, or even before that, I was like, no, there's no way. I've never heard about this before. It's a scam.
yeah,
But then I was like, okay, as I understood it and learned about it, I started investing passively. I'm like, oh my gosh, this is amazing. This is too good to be true. I jumped on 2 passive investments within 3 weeks after learning about it and doing my due diligence on it and the team. So I love that my clock started ticking, right? My freedom clock, I'll call it. Started ticking and learn more about it. And I wanted to be a GP myself, because that impact that I had, Vlad, back in the day, I wanted to be able to provide that impact to my friends and family who had never heard about, I don't want to be a landlord. Like you said, they don't want calls in the middle of the night about
yeah,
squirrels, raccoons, toilets. They wanted something that's passive, and this had a huge impact on me.
yeah.
Um, Vlad, I know you kind of touched on it earlier, but what do you think makes real estate so attractive to you and your wife?
You know what it is? It's a real asset.
Yeah,
It's not one friend told me, he goes like this: I invest in stocks, but when, let's say, Elon Musk or Zuckerberg go on TV or tweet something weird, their stock drops by like $2 million. And
yeah,
he's like, how can I invest into something that one person can just control and the money is just jumping all over the place? You invest in something real. You can literally, let's say I had a deal in Dallas. We closed on a deal in Dallas in March. You can, if you invested in it, You can literally go and touch that building and say, hey, I partially own this. I'm a partially owner of that building. It's there. You cannot take it away. It's virtually impossible to move a building.
Right.
So that's why I like the security of it. People invest in it not only for security because it's there, and additionally, just on average, real estate doubles within every 7 years. And also, you can invest in anything. Let's say storage, RV parks, mobile home parks. I mean, there's tons of opportunities, hotels, tons of them. Any real estate, it's a real asset, and I believe in it. And also, there's always going to be need for housing.
Yeah.
It's a need for housing. Government cannot provide the need for housing, right? So government, they don't build anything, so they have to give all the subsidies, tax, anything to private people, to private investors that willing to build things, either be homes, big apartment complexes, anything that you can think of. That's why I believe that we will get those benefits. And if you look at what happened 6 years ago, 7 years ago, we got this depreciation benefit. Real estate was awesome. And now you have this accelerated depreciation. And that changed the game completely, right? So it's basically where you can depreciate the whole building, not in 27 years, that's its normal depreciation lifespan, but in 5.
Mm-hmm.
And take all those savings, all those deductions within first 5 years. And that changed the game for everyone. Everybody who I know just jumped in to take advantage of this, because you can offset the gain that you make, the money that you make passively,
Yep.
and offset that depreciation, offset that money. So it's a huge game changer. And I believe it's going to be more will be coming. More, because as we know now, as we see, there's huge shortages everywhere. People are buying in Florida and the prices are going up, even though the rates are higher. People are still buying.
Yeah.
Here in New Jersey, we have lines that they're like, oh my gosh, look at this house. Let's go buy, let's go buy, let's go buy. Everybody's buying and a lot of people are not selling because they locked in their low rates. They don't want to get out of them. They're afraid what's happening. They're afraid of, further hikes. There's a lot of uncertainty. Typically, multifamily is not that affected, because if you look at just sheer numbers, right? So if you have a duplex and one person's not paying, you out of 50% of your income.
Yep.
But if you have 100 units and one person's not paying, it's a drop in the bucket. We don't even feel it, right? Obviously, we wanted to as close to 100% as possible, but we actually think if it's 100% occupied, then your rents are too low.
Yeah.
Right. We increase the rents a little bit just to see, because we actually underwrite, or we look at our projections where our occupancy is at 97%. So we actually estimate that 3% of the building will be vacant. So we can work on those units, we can improve them, we can fix lighting, counters, refrigerators, flooring, whatever you call it. So we work on our pro forma. So that's exactly what our strategy is here. So we believe that I think multifamily is a great investment vehicle. Absolutely.
Yeah, I totally agree. Multifamily has all the benefits that real estate in general offers, right? Appreciation and cash flow and tax benefits, things like that. But when you go from a single family residence to a multifamily residence, then there's even more benefits. And one of those you mentioned, the accelerated depreciation or bonus depreciation. That's on commercial property. As you know, you have the scale, so you can have, if you have 100 units, maybe you have 15, 16 buildings, but you don't have 100 buildings.
Yeah.
It's one insurance policy, not 100 insurance policies. Depending on the size, I think about 80 units and above, you can get away with one leasing person and one maintenance person.
Mm-hmm.
And that's your on-site staff. You're providing a full-time job to 2 people, that work at that complex 40 hours a week. And so there, if anything goes wrong, Vlad doesn't have to get a phone call about a raccoon or a squirrel at midnight because it's already taken care of by someone else because they're there on site. And so I just think that there's so many reasons, and something you mentioned earlier in the conversation, with any crisis, people need housing. And whether that was 2007, 2008, COVID, the current market that we're in now with sky high interest rates. I was talking to someone in New York, and we hear all the air quotes, but horror stories of the real estate market right now, in how New York is a terrible place to invest, because people are fleeing, every day. And not just New York, but because you're from there, and because the person I talked to, he lives in Long Island. There's still people that cannot find a home right now, even with the high interest rates and people moving out. There's still such a housing shortage that people still can't find them. And so when something goes on the market, you mentioned this when you're flipping. If you have a day job, or if you're unavailable, you might miss out on an opportunity or a home just because there's such a shortage. And I love that multifamily offers housing at scale, right? So it's not one home, it's 100 units. And so you have a very large tenant base to pull from. So me and you are on the same page, Vlad, about multifamily, and it's just, and I talk about it a lot during my podcast, but I love talking about it because I think there's so many benefits that if, people hear you talk or hear me talk, you'll get lost and maybe only remember 2 or 3 benefits when there's probably dozens out there, right?
Yeah, I'll give you one example. Like, one of my friends, he cannot invest in stocks, right? He has a conflict of interest. So he was keeping his money in savings accounts. And I'm like, what are you doing? Look at the possibility. So he didn't invest with me at first. And I'm like, listen, don't invest. I know you don't possibly feel comfortable, or you don't know about it. And his first question is this a Ponzi scheme? Why don't everybody's doing it? I'm like, people are doing it. You don't believe me? I can introduce you to about 50 people that are doing it, at least 100, because you're not in that circle. It's not advertised. It's not broadcast. You heard of REITs? Yeah. But in REITs, you don't have tax benefits and you have to pay them, and there's more issues, right? So why would you go through a REIT if you can go direct and get all of the benefits? So I told him, listen, try it out, see what it is. If you have any questions, and I gave him like a book to read, right? Hands-Off Investor, really nice book, easy read, and it tells you what to look for, what questions to ask. And he's like, this is really happening? I'm like, yes. And he was asking me, how can you possibly buy, let's say, 128 unit apartment complex in Dallas if you live in Jersey? And I'm like, but I don't have to be there. Property managers there. I have people that live there, boots on the ground. If I have to go there, I can. It's like a 5-hour flight, but I just make a phone call. We do weekly Zooms with the property manager to see how everything is going, to see if they're executing our plan, to see how many units they fixed, if they painted something, if they fixed the roof, if there's any issues. We literally have weekly calls. And that's exactly how it is. And I'm like, everything changed. Look at you. You work from home. You don't have to go to the office anymore. No. Same thing here. My home is my office. I don't have to go to work, which just happened to be in Dallas, right? So, and he kind of understood. And the funny thing is, he invested in the deal. So on that deal, we are targeting monthly distributions, cash flow day one. So he calls me on the first distribution. He goes, did you know I just got like $500 in my checking account? I'm like, well, yeah, congrats. He's like, so what do I do with it? I'm like, well, it's your money. Spend it however you like. You got a distribution. He's like, really? That's what I should expect? I'm like, yeah, give or take. I mean, it might vary a little. Don't like depend on it to pay for your car payment or anything like that. But that's basically extra $500. And you got it while you were sleeping, right? But wait for the K1 form at the end of the year. And he's like, what is that? I'm like, go ask your CPA and then come back to me. He asked, and he's like, okay, I don't have to pay taxes on these? I'm like, most likely no. He's like, that's it. Why didn't I do this before? I'm like, exactly.
Yeah.
So I'm not convincing people to invest with me. I'm educating people of
Yeah.
this journey, that of the possibilities. And once you know, you're gonna get hooked.
Yeah, I love that story. In a sec, I want you to explain what a K1 is to the audience. But
Yeah,
um,
yeah.
yeah,
Please go ahead. I'm sorry.
I love that story because I think a lot of people just don't know about what we do, right? And we're not selling them a Ponzi scheme. We're not, selling them something fake. It's a real asset. They're getting into a real property. First off, I would not invest with someone you don't know. You got to know, like, and trust them. You got to talk to them, make sure that they've done this before, that their team has done this before. So don't just, hear this and you've never met either one of us and invest with us. Have a call with us first and, uh, you know, let us tell the story. But a lot of people like you and I, Vlad, don't have these multi-million-dollar marketing budgets just to go do ads all over the place, and so that's why a lot of people haven't heard of what we do and that we can offer this. And it's not a get rich quick scheme. It is an opportunity to invest in a real hard asset without doing the work, right? You vet the sponsor, you vet Vlad, make sure he's a good guy. You understand the opportunity, the property, the returns, and then you can invest with him. I would, check the emails that go out and talk to Vlad every couple of months just to make sure everything's good. But it is a real opportunity to build and grow your wealth, and I love what we do. But do you mind explaining what a K1 is?
Yeah, the K1 is when we do depreciation, when we do this study of depreciation of the asset. At the end of the year, it's a form that you receive, and that form basically negates all the gains that you received,
Mhm.
but it goes only towards passive income, right? So, for example, if you receive passively, let's say $10,000, and your depreciation or the form that says you minus 80, so you apply this towards the gain, and that's exactly how it works. Ask a CPA. Every situation is different, but that's the basic thing. So basically, K1 shows the losses of the building.
Yeah,
Yeah,
perfect.
and I've been telling people of the more I learn about this, the more fascinated I am why it's people don't really talk about it, because like you can invest your 401k
Yeah.
and you can invest 1031, because people are thinking, yeah, you can 1031 into another rental property, a larger one, but people don't know that you can invest into a syndication with a 1031, right? So it's a huge opportunity. In fact, I'll give you an example. One person invested over $1 million with me into a syndication, and it was a huge success. He didn't know, he was out of the ID window. There's a certain ID window where you have to identify a property where to invest.
Yeah.
And I just reached out to him, and he's like, oh my gosh, your building looks beautiful. It was in San Antonio at the time. So, and he's like, actually flew over there. He looked at it, he walked it, and he was very happy um, uh, uh, at the property. He was very happy with the team, and he invested. Yeah, so there's a lot of opportunities for investments.
Yeah, that's awesome. And you mentioned out of the ID window with a 1031, and won't go into a ton of 1031 information, but what Vlad's talking about is a 1031 is to legally defer taxes. It doesn't eliminate them, but it defers it. And so the government has that. So you buy bigger and better properties, and that way they get, more and more taxes from you when you got to pay the piper. And so a 1031 lets you defer them, but there's a lot of stipulations with a 1031. Definitely talk to a CPA a lot more about that, someone much more qualified than Vlad or I. But with a 1031, you have a very short amount of time to identify some properties that you're interested in, and then from there, I think you have a short time to actually close on the property. And
Yeah,
so
I believe it's 6 months to close.
Okay. I think it's like 60 days to identify a property.
To identify, yeah.
So if you're
Somewhere
out
there.
of that window, then you gotta move quick. So anyway, that's very, very high level of what a 1031 is. But yeah, it's very cool, Vlad, that you can invest with your 1031 funds into a syndication, and doesn't make the whole syndication 1031, just makes your investment 1031 still valid and active and all that. So there's so many benefits. You mentioned the 401k. You can invest IRAs. There's something called the 403b, which is just like a 401k for nonprofits. So if you fall into any of those buckets, reach out to Vlad, and he can definitely help you, point you in the right direction there. Vlad, I'd love to ask what the company goals are over the next 9 to 12 months.
Yeah, you know what? Initially, we were looking at basically number of units, but I shouldn't be looking at that. We kind of changed. We're looking at quality deals now. The situation in the market changed. The rates are higher.
Yeah.
By the way, in multifamily space, since we go directly to Freddie and Fannie, right? We don't go to Bank of America. We go to Fannie Mae, Freddie Mac. Our rates, like right now, 5.3%, just to give you an example. So much better rates than single family space. So anyway, our goal is to go for quality, because there's a lot of uncertainty still. The growth has obviously decreased. Now we're in a downturn of a cycle. We're in a different market cycle now. So a lot of people are sitting on the sidelines, not really buying anything, holding their money, looking for opportunities. Last year we purchased 6. We were in the 6 deals. This year, this is going to be our second one. So deals are out there, but it's up to everybody's risk tolerance.
Right.
My risk tolerance, hey, listen, I look at deals this way. I'm not trying to make the deals work. I'm trying to kill the deals. I'm trying to poke holes in them as much as possible. And if I cannot kill it, then I'm in it. That's the thing. And I invest my own money pretty much in every deal that I'm in. So I have skin in the game. I really care. Most important thing, I care about the investors. If I lose money, I'll cry about it. Absolutely. If God forbid something happens with the investor capital, that's unacceptable for me. So I look at really quality stuff, and I'll give you an example. Like, you can invest in smaller markets, right? Let's say Georgetown or Waco, you name it. I believe it's just my opinion on this. Good investments everywhere. I like bigger cities now, main markets, Houston, Dallas, big major areas, Kansas City, in the Carolina, same thing. In Florida, not that I do Florida, I do have a deal in Florida, but like Jacksonville, Orlando, Tampa, those will have growth, decreased growth, but still growth. So I right now buy in Dallas, Houston, Kansas City, some parts of the Carolinas. I like quality over quantity now. So my thing is to continue growing, but get fewer but higher quality units, not C class, A and B class.
Okay.
I believe those are safer. Recently we purchased, like I said, in March, it was a B class. Now actually we're looking at A class buildings in Dallas. With insurance on the rise, rates on the rise, everything is kind of not settled. There's a lot of uncertainty. We're looking at higher quality units.
Awesome. And do you mind maybe just giving like a quick overview of what A, B, and C class are?
Yeah, sure. Basically, just if you look at 1980s, that's like a C class apartments for just regular blue collar workers. Then you have B class. I don't know. It just depends if you have B minus or B plus. It's just however people look at them. Those are the newer units. up to, I guess, 2000, year 2000.
Yeah.
And everything from 2000 up to now is A class. So that's like the most luxurious, highest, everything is, top notch, top class.
Yeah.
It just kind of varies, because sometimes you have A minus and you have B plus, and some people say, I'm looking at hard C, and I'm like, oh gosh, there's another term, now, hard C. I mean, it's just however people, we like our, fancy terms.
Yeah.
So, but yeah, it's just basically the class of a building. We don't look at D buildings, because typically those are in bad areas, and there's a lot of crime there, and we typically don't look at those. If we cannot go there at 5 p.m., we just don't. We pass on those.
Sure.
Before, possibly, if it's in a good area. So if it's a building that's falling apart or needs a lot of help or repairs, but it's in a good area, yeah, we'll look.
Yeah.
But now, not really. I want to be safer. I want to buy newer assets. They may have less of a cash flow because it's a newer asset, right? But it's safer. So right now I'm looking for safety. I'm trying to mitigate risk anywhere I can. Like, my loan is at 65%. So yeah, I need to raise more money, but I'm not over leveraged. I
Sure.
have really low leverage. And we fix or lock our rates for, let's say, 7 years, even though we hold for 5. So there's not going to be any surprises. We're not using adjustable rates or anything like that, because there's few people that purchased buildings with adjustable rates when the rates were 3%, and now they jumped up to 7
Yeah.
or 6 or whatever they are.
Higher
And
than
their
that.
and their cash flow is gone. Some are in trouble. So we don't want to have that. So we are looking and projecting what might happen and eliminating those risks. So I'm in the business of eliminating a risk for my investors and myself, of course.
Man, that's great. Before we close, I wanted to ask you a few questions, like a recent book that stands out. Do you have anything that you've read or listened to that's either a book or audiobook?
Yeah, you know what? I read to two. I always do audiobooks.
Me too.
It's just while I'm driving on a motorcycle, I always listen to them. So there's one by Ben Hardy. He written a few books, Who Not How, and The Gap and the Gain. His new book, 10x is easier than 2x. So basically, he talks about going deep and really concentrating and getting rid of 80% of things that are making you busy, and concentrating on 20% that will produce the highest result. So that's one of the book. I'm actually working on a lot of my on my mindset now, and I've I was speaking with one of the pretty big investors in real estate space. His name is Pace Morby, and when I talk to him, he's really focused, like so focused. When you speak with him, he's like so present and so here now. I was just amazed.
Wow.
And I asked him a question. I didn't ask him a real estate question, but I asked him, how do you stay so focused? How do you stay so present? This is like amazing to me. So he told me a few things. So I started working on my mindset, and meditation is one of them. So I'm working on meditation and yoga, and just to be present and fully here with you now, and fully concentrating on a task. So I'm working on my mindset. So in addition to the book that I mentioned by Ben Hardy, I'm working on meditation books. I don't know if anybody's curious on that thing, but it really is good, not only for work, but like, for example, I'm guilty of that. When my wife tells me something, sometimes you think about something else and you're not really truly listening. Like, you're listening, but not really listening.
I
So
mean,
I'm working
I
on
know
that
what you're
too.
talking about. I always listen to my wife, but
Of
for other
course.
people, right?
Exactly what I mean. So it helps everywhere. Like, really truly be present for your kids, for your friends, for your wife, even here with you now. So that's what I'm working on now. So check out a few books, like The One Thing by Gary Keller, helps you identify one thing that you're really good at, or
Okay.
Ben Hardy books. So those are really nice.
Do you have a meditation book you'd recommend?
You know what? I do have one. I'm listening to Joe Dispenza. So he's talking about meditation and really be um, this few that I tried, like TM Transcendental Meditation and Joe Dispenza, he's talking about, just you can Google him and he has several books. He's talking about mind and body and being
Okay.
one and present. So those are really good books that if you want to get into that.
Awesome. Thank you. All right. So what can people expect to see from you in your business over the next 5 years?
Oh boy, there you go. I'm looking at my board right now. Look at this. You ready? I have really bold goals.
Do it.
JV, GP, or LP, 25,000 doors by 2027.
Wow.
There you go. So joint venture, GP, that's joint or LP, limited partner or general partner in 25,000 units by 2027.
That's
so
awesome.
Those are my big goals.
Awesome, man. That's a big goal. Love it. Love it. If you have a deal that you're raising capital for, or people just want to maybe ask you about your motorcycle or the animal rescue, what's the best way to reach you?
Listen, I have a really unique name, Vlad Arakcheyev, right? So you can look me up on LinkedIn, Facebook, zontikventures.com, ZONTIK ventures.com. Reach out to me, call me. And in addition, I'm a real estate agent in New Jersey. And you know what it is with real estate agents, right? All the information is public. If you Google me, I just pop up right there, right on the front page of Google. So I'm really easy to get a hold of. If you have any questions, reach out. Listen, if you're not ready to invest, please don't invest. At least ask about it. At least find out if it's for you. Maybe it's not for you. Maybe you're looking to do something else, but you might know someone that is that is ready to invest. So if you know someone that might be looking to invest or might benefit from this, hey, listen, let me know. I'll talk to them too. So.
Awesome. Yeah. I have your social media and website, your calendar link, all that. So I'll put that in the show notes. So if anyone's interested in that, it'll be in the show notes. It'll also be on the YouTube channel. And if you still get lost with all that, reach out to me and I would gladly put you in touch with Vlad. Man, it's been amazing talking to you, Vlad, going from graphic designer, being furloughed for 6 months, a midlife crisis on the motorcycle for 6 months to now 25,000 doors in a few years. Really appreciate you being here, man. Thank you for your story, for telling your story. And it's been an honor talking to you.
Yeah, you too. Thank you so much. And I really hope you had fun and find it educational. So yeah, absolutely.
Yeah. Thanks, Vlad. Have a good one.
Thank you.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.